The crypto shock, now as Ethereum surpasses Bitcoin. Ethereum outpaced Bitcoin in the total number of transactions for the first time. Ether saw more daily active addresses, which is the number of active participants in the transfer of a cryptocurrency token. This includes both the sender and the receiver. The growing number of active Ether addresses is a sign of how the token is growing in popularity, although Bitcoin addresses closed the gap soon enough. Santiment, a crypto analytics company, tweeted that Ether, the official currency of the Ethereum network and the second oldest major token still around, created history, surpassing Bitcoin for the first time in daily active addresses. Let us understand the magnitude of the Bitcoin's fall. The data on the BitInfo charts reveals more than what Santiment has put out. To understand the magnitude of the fall in the number of Bitcoin's active addresses, let's sample these numbers. On April 15, 2021, Bitcoin had a gargantuan 1.14 million active addresses. On June 27th, it bottomed out at just over 462,800 addresses. On those same dates, the price of Bitcoin in India went from 47.2 lakh rupees per Bitcoin, quite close to its peak, to 23.9 lakh rupees as per historical data on Coinbase, or almost the lowest Bitcoin has been valued at in 2021. That is still higher than it was valued in the past, although the bull rush of the early part of the year seems to be behind us now. Ether, on the other hand, had a little over 751,000 addresses on April 15th. On June 28th, its numbers had increased to over 926,900 addresses, when Bitcoin was just at about 618,900 addresses. The dip in the number of Bitcoin's active addresses could mean that people are selling off their digital assets at a record pace. The Ether price in INR peaked in May, later than Bitcoin, reaching 3.2 lakh rupees per token on May 12th, as per Coinbase's historical data. On April 15th, Ether was trading at 1.82 lakh rupees and went to 1.47 lakh rupees on June 28th. Now, the only question many had on their minds was if Ethereum would sustain the momentum. Could this be due to the underway upgrades or DeFi experimenting by banks? The Ethereum price, up almost 1,000% on this time last year, has outperformed Bitcoin over the last 12 months by a factor of 3 as long-awaited upgrades get underway and banks begin experimenting with decentralized finance, or DeFi, using crypto technology to recreate financial products such as loans and insurance, and mostly built on top of Ethereum's blockchain. Meanwhile, the NFT craze, that's non-fungible tokens, that has seen all manner of memes, digital artwork, tweets, and YouTube videos sold via Ethereum's blockchain, has further boosted Ethereum demand. Last month, the chief investment officer at $100 million digital asset investment manager 2Prime forecast Ethereum will eventually flip Bitcoin, predicting Ethereum's utility alone will outstrip anything else. The DeFi boom, helping the price of Ethereum rivals such as Cardano, Binance's BNB, Polkadot, and Solana explode many thousands of percent, comes as Ethereum begins its long-awaited transition away from Bitcoin's proof-of-work validation model to the more energy-efficient proof-of-stake. Wall Street giant JP Morgan, in a report first revealed by Forbes, predicted Ethereum's shift to proof-of-stake will spur crypto adoption and help generate $40 billion worth of value by 2025. Not only does staking lower the opportunity cost of holding cryptocurrencies versus other asset classes, but in many cases, cryptocurrencies pay a significant nominal and real yield, JP Morgan analysts write. More shock. ETH soars in price past Bitcoin. The world's second most valuable cryptocurrency has soared even more than Bitcoin in 2021 thanks to non-fungible token mania and increased adoption of Ethereum, Ether for short. Ether prices are now hovering around $3,400, a more than 350% gain this year. Bitcoin prices have risen a mere 90% by way of comparison. In the past week alone, Ether is up a staggering 30%, while Bitcoin is flat. That has raised some concerns that Ether has risen too far, too fast, just like Bitcoin did in 2017 before plunging spectacularly in 2018. So why is Ethereum, which now has a combined market value of almost $400 billion for all its coins in circulation, taken off lately? Ether is the main currency of choice, used to purchase non-fungible tokens or NFTs, the digital assets that have become increasingly popular in the art and sports collectible world. Why is there so much interest in the Ether right now? With the explosion of NFTs, people are viewing alternatives to Bitcoin, like Ether, as a real utility. It's not just a store of value. The digital gold that Bitcoin is, said John Wu, president of Ava Labs, an Ethereum-compatible blockchain firm. Wu added that Ether is also getting a boost thanks to Coinbase, the giant crypto brokerage firm that recently went public, which is now supporting transactions for Tether and USD Coin, two so-called stable coins that are pegged to the dollar. Each of them is compatible with Ethereum digital wallets. Apart from technical reasons, what else could have spurred ETH Rise? Ether's rise goes beyond technical reasons. There's a real, fundamental, and persistent demand shift happening right now, said Jeff Dorman, Chief Investment Officer at Arca, in a blog post. He said up until recently, new cryptocurrency investors only cared about Bitcoin. Then they started to show interest in other cryptocurrencies, particularly Ethereum, as a way to diversify their holdings. Ethereum has now crossed the Rubicon into the mainstream, and despite the difficulty understanding it, investors of all sorts are finding reasons to add ETH to their portfolios, Dorman wrote. S&P Dow Jones Indices has validated cryptocurrencies as well. The index provider behind the Dow and the S&P 500 said that it was launching a Bitcoin index, Ethereum index, and cryptocurrency megacap index. Traditional financial markets and digital assets are no longer mutually exclusive markets, said Peter Rothman, a global head of innovation and strategy at S&P Dow Jones Indices, in a press release. Investors may also be flocking to Ethereum as well as other cryptocurrencies because there are rising concerns about inflation looming on the horizon as the global economy and U.S. job market heats up. Ether is part of the so-called decentralized finance, or DeFi, revolution that offers financial products which don't rely on central banks. With inflation rising, DeFi products on Ethereum are the perfect way for people to combat the uncertainty created by central banks, money printing, and various supply shocks, said Sergey Nazarov, a co-founder of Chainlink, in an email to CNN Business. All that said, investors probably need to be careful. Ether's rise has been so sharp and sudden that one can't help but expect an eventual pullback like Bitcoin had in 2018 after it first enjoyed a massive surge. But Tally Greenberg, head of business development at Allnodes, a cryptocurrency hosting provider, said she's not worried that Ether will suffer the same fate. I'm not sure that Ether will dip that much, she said. Even its price may fluctuate, but Ethereum may have even more potential than Bitcoin. However, will ETH maintain the momentum? Now, the only question many had on their minds was if Ethereum would sustain the momentum. Well, the answer is no. On July 3rd, Bitcoin was once again at the top, with roughly 823,287 active addresses to Ethereum's approximate 683,608 users. On July 5th, the largest cryptocurrency was trading at 25,59,872 rupees following a 2.17% fall in its prices. Ethereum, on the other hand, traded at 169,245 rupees after taking a 0.21% hit in the last 24 hours. While Bitcoin's current market cap is at about $642.54 billion, nearly 3 times that of Ethereum's $265.38 billion.
That's all for today. If you have any question regarding crypto, do not hesitate to reach out to us in the comment section. To continue enjoying more of our crypto videos, kindly subscribe to our channel. Do us a favor by liking, commenting, and sharing our content with friends or across social media channels.